Well, hey, deal makers, welcome to a show where it's all about financial freedom with real estate. Let's do this. But today I want to talk about deal flow and the secret really to unlocking off-market multifamily deals, because that's really where the action happens, is in the off-market space. And people have said for years, my gosh, the market's so hot, I can't find deals, and they keep waiting and waiting for the market to normalize. And what happens then is the more sophisticated investors are quietly doing deals. Why? Because they figured out how to get deal flow, and they figured out how to get into the off-market space that no one else sees, or a low number of people. And we're going to talk about today here and how to get deal flow. We talked about becoming deal ready in a previous episode as well, and what to do before you actually talk to any kind of brokers. And we're also going to talk about raising capital, which is pillar number 4. So what we're going to talk about here today is how to get consistent deal flow. Before we get started, I want a big shout out to Ali S., who left us a review on iTunes for the podcast. Ali said, Michael does a great job in making us think about what kind of life we want to live and how to do it via real estate, a must for all. Thank you, Ali. Appreciate it. I'm glad you like the podcast, helping you design the life you want through real estate. So if you've enjoyed the show, leave us a review on iTunes as well. I'd love to shout you on the show as well. So with that, let's get right into the secret to finding off-market deals. A lot of people struggle with getting deal flow, and there's really 3 mistakes that a lot of people make that hold them from finding good deals. The first one is that people are looking for deals in all the wrong places. Number 2 is they're calling brokers before being ready. And number 3, they're not really focused enough on building relationships with brokers either. So let's talk about each of those in turn. Looking for deals in all the wrong places. And as a single family house investor, I was used to finding deals on the MLS, but I couldn't find a lot of apartments there. And I finally found LoopNet, which I thought was my solution. And this is, of course, equivalent to the MLS, but for commercial real estate. But then I found that the listings there weren't good deals at all. I later learned that brokers list their listings on LoopNet after everyone on their buyer's list had passed on the deal. Wasn't very useful. So how in the world was I going to find deals that I could actually buy? Now, once I discovered the answer that I'm going to reveal shortly here, I was getting deals sent to me before they were listed on LoopNet. The second mistake is not being ready before you call brokers. When I got started, when I quit my job in 2005 after having read Rich Dad, Poor Dad, I had a bunch of money, and so I had a runway, and so I learned everything I could about how money works, and I took a commercial real estate class, and I started just simply calling brokers. And I found that they really weren't taking me seriously because I don't have any apartment investing track record, and I kind of figured I was stuck. And today we know the solution is that, the brokers are looking for track record, for experience, but how do you get experience when you don't have any? Right? And how do you break into the game? So we talked about in a previous episode of becoming deal ready to overcome this problem. And that you got to become deal ready before you call brokers. Specifically, you want to build a team around you so you can leverage their track record. You need a team of a property manager, a lender, an advisor, and from that position, you now leverage their collective track record, and so now brokers will take you seriously. So that is the biggest mistake I was making. It really it just stopped me from being able to find deals. And then number 3, I see a lot of people then, even if they know that brokers are the gateway into deal flow, they're not focusing enough on building relationships with brokers. And so those are really the top 3 mistakes that I see people make, is looking all the wrong places and then not really preparing thoroughly to meet with brokers, and then not really investing properly in those relationships. So let's talk about how to overcome those things. Obviously, what I talked about, the number 1 way to find multifamily deals is through brokers. It's the single family house strategy of MLS or sending yellow letters or postcards. They don't really work. They just simply don't work. We found a lot of larger multifamily, I think anything over 20, they're literally owned by LLCs. They're not owner-operators. There's going to be gatekeepers and things of that nature. People aren't going to sell their multifamily for all cash, fast close. They're not going to do that. They're going to call their broker, and they're going to want the most money they can through their broker and their channels as well. So it just doesn't really work very well. So we talked earlier about overcoming the problem of not being taken seriously with brokers is to actually build a team around you. We talked about it at length under Deal Ready as well. So even if you don't have an apartment investing track record, you can be taken seriously by brokers if you actually build a team around you. We talked about that before. And then at the same time, you want to use the right language. In other words, you don't want to call a broker and use silly language like I did back in 2006. Hey, Mr. Broker, I'm a real estate investor. Can you send me some listings that I can take a look at? Using all kinds of wrong language, right? And so what we really need to do is use the right language when we talk to brokers. And so that requires a little bit of a shift, a little bit of education. So for example, I'm going to give you a script here that sounds vastly different. It's not very complicated, but it sounds a lot different. And simply by using a different language really makes a huge difference. So for example, instead of saying what I said earlier, how about something like this? Hey, I'm looking for deals in a 1 to 2.5 million range with at least a 6% cap rate. I would consider light to medium renovations, but no repositions. Is there anything you have in your pipeline that you can send me over for me to review? Now you're using more like insider language, like cap rate, reposition. And you sound like someone who knows what you're talking about. Especially if you talk about your team behind you, there's very little reason for the broker to believe that you're a tire kicker, or I mean, you could be, but you're not giving them any reason to believe that you are one of those things. So make sure that you use the right language in a script that I just described when you approach brokers. It reminds me of a story of young Anthony Metzger, a young guy. His background was actually a winemaker. Like seriously, he was a winemaker. He was learning to become a winemaker. He's 25 years old, had never done any kind of real estate investing before, and he wanted to go straight into apartment investing, which is cool. And he followed what I just talked about here, right? Because a lot of people, young people, they're like, oh, no one will take me seriously. And that was kind of his hang up as well. But I get it with older people as well because I don't have any track record. So he kind of did what I just talked about here. He built his team and used a similar script that I just shared with you, and brokers took him seriously enough. Never asked him for proof of funds. And within a few months, he was awarded a $11 million deal. It was a 218 unit in Little Rock, and partnered with another experienced operator who raised the capital and closed on the deal. And so he got general partnership and he got him into the game. So the good news is that you don't need previous apartment investing experience to get started with apartments. Instead, get some education, use the right language, and build a team around you. And that's really how you break into the business. Now, here's kind of a hack if you're not feeling comfortable enough to call brokers yet. We use something called a throwaway market, right? And a throwaway market is you're calling on brokers in a market that you have no plan on actually buying something there. And this works great even in your backyard. For most of us, you're not buying in your backyard because you're living in an area where it doesn't make sense to buy. So let's say, back to me, where I used to live in Washington, D.C., Northern Virginia area, I would never buy a deal there. I can't get it to cash flow, so I wouldn't buy there. But that's a great throwaway market because now I can actually drive there and look at property. And the more I do that, the more my comfort zone expands. And with that, my confidence as well. So if you're not confident yet in talking to brokers, then call into a market that you're not going to buy anything in. Now, that being said, there are ways you can actually accelerate the relationship building with brokers. And I'm going to give you kind of eight tips here really quick and undo that, because you do one, or the more of these you can do, the faster you can build relationships with brokers and the faster you get access to these off-market deals. So tip number one is to appear professional. That is obviously, it goes without saying, dress your part, maybe have a business card or a very simple website up. So just make sure that you appear professional when you deal with them. And number two, I would say provide value to valuable people, right? So don't approach brokers expecting to get something for nothing. Like if you want them to email you when they come across an off-market deal, you've got to provide value. And that could be something like where you're on some news sites and you forward them an interesting, cool story. Hey, thought of you here. Maybe you'll find this valuable. Something like that. So figure out how to weigh, because you need to stay in touch with them, and providing value to them is a great way to do that. Number three is to provide timely feedback. Timely feedback meaning that when a broker actually does send you a deal, you got to respond. And don't take a week to respond. You want to respond within 1 or 2 days, which is why being able to analyze the deal using our 10-minute offer technique is such a great technique, because it doesn't take you 4 hours to actually analyze a deal and get back to a broker. So provide timely feedback. What this does is really elevates you to the top of their buyer list. So I remember asking a while back, how many of your buyers on your buyers list actually respond to a deal? About 20%. So just by you responding to a deal elevates you now to that 20% of top buyers. And that's really where you want to be in that inner circle over time. Also, by providing timely feedback, not only is it professional and respectful, but also the broker now will be able to learn what you're looking for. So when they come across an off-market deal that kind of fits your criteria, they're more inclined to call you. Number four is to use video. I do this a lot, so especially with Loom now out there. So when you're actually analyzing deal or putting some numbers together, when you're kind of coming back with, hey, this price won't work for me, but here's what would and here's why. You want to show them how you arrived at that number, right? Because you're using cap rate, you're using prices and NOI, all the things that the words that they're using, that the data that's available in your marketing package, maybe with some rules of thumb, and then you're showing them a video. Because what I found when I did this is that these brokers, they're thinking like they're going to forward that video to their seller, because at the end of the day, they want to do a deal. They don't really care that much of what price it transacts, right? So they're using that as a tool to get the seller to agree to a lower price in this case. And a video is a very helpful tool because it helps explain to the seller why a buyer's price offer is lower than what they're asking is. Number 5, hop on a plane. Now, typically I would say, hey, don't hop on a plane until you have a deal, at least under LOI or maybe contract, to save money, et cetera. But I found that when you invest in a relationship, you may actually want to go and fly to the market in advance. Now, you're going to do a lot of work in advance of hopping on a plane to visit that market. You're going to do a lot of work on Zoom and phone. You're going to talk to property managers and lenders and brokers, and you're going to put together a short list. So when you go over there, you're going to meet with the top 3 brokers, the top 3 property managers, maybe a lender or 2, and you're going to build relationships. But I can tell you that alone will now bubble you up to the top 5% of a broker's list, because people are not willing to invest in relationships in this way. Tip number 6 is do what you say. You can tell a lot about a person's character based on their follow through. And brokers want to do business with people they can count on. So if you say you're going to do something, do it. And this is even with the small things. Like if you promise to send an email by 5 o'clock on Friday, send the daggone email by 5 o'clock on Friday. Like, it seems trivial, but you'd be surprised by how much you can differentiate yourself by being a man or woman of your word. Number 7, be persistent and consistent. Brokers are busy, and they're not always going to return your calls or emails. It's your job to stay in contact with them on a regular basis. Check in, see what listings they might have in their pipeline, provide value, come up with reasons to stay in touch. And most buyers, oddly, don't stay in touch with their brokers. And interestingly, the other way around, brokers don't do it either. You'd figure they would. It's been on many occasions, I would check in with a broker and they go, "Oh, I'm glad you called. Yeah, I just got a deal here last week." I'm like, "Why didn't you send me the deal?" I don't understand. They don't understand email lists, and I don't know. But so it's your responsibility to stay up and stay consistent and staying in touch with them. Number 8 in dealing broker relationship is to track lost deals. We've done a number of deals where we lost the deal, someone else won it, whatever, and then month or 2 later, it didn't close. And again, the brokers don't call you back and go, "Oh, remember that deal you were bidding on? Well, it didn't close, but you want to bid on it again." No, it just doesn't happen. I don't know why. You would have figured that they would put the everyone that was bidding on it and tell them about it, and they don't always do that. So make sure you stay in top with a broker and call them a month later. "Hey, how's that deal going?" Like, even if it closed, you can say, "Hey, do you mind telling me what price that traded at?" And again, another reason to stay in touch with that broker. So number 8, track lost deals. And so really, these are the 8 things you can do to build a relationship with a broker. If you do that, you will become part of the inner circle on that broker's buyers list within 60 to 90 days. It doesn't take years to get credibility with brokers and put them on the inner list. So this is really a great way to accelerate that process. And sometimes students, people will tell me, "Hey, I can't find a good deal." And I'll ask them, "Well, how many deals have you looked at? How many offers have you made?" "I made about 10 or 15 looked at." And I said, "Look, you're going to have to look at more deals than that." Now, we really talk about the 100-10-1 rule, where you're looking at 100 deals, you're making 10 offers, and then you're getting 1. Okay, so it's definitely a numbers game. And people who are in the single family house investing in a wholesale business understand that this is a numbers game. And it's really, you have to be consistent. You have to find a market where you can underwrite, 5 deals a week. If you can underwrite 5 deals a week, right, that's a lot of deal flow. And so you can actually get a deal done in about 6 months if you have that kind of deal flow. But if you get less deal flow, it's going to take longer. So make sure that you somehow are underwriting that many deals. And that is really the secret: consistent deal flow. And the good news is you don't actually need a huge number of brokers to do that. You need like 2 or 3 high quality brokers feeding you deals, each broker feeding you 3 or so a week, 2 or 3 a week. And now you are getting that kind of deal flow. So stay consistent with deal flow and invest in those relationships. Because again, you're not investing in dozens of brokers. It's a very small number of relationships that you're investing in. Hop on a plane, stick with some of these tips I'm talking to accelerate that process. And if you look enough deals, then the outcome will be inevitable, which is your first deal. Now, if you're struggling a little bit with deal flow and you're just not getting deal flow, or you don't know how to analyze deals, and you don't really, you're not getting taken seriously by brokers, then consider getting some help, and we'd love to help you with that. That's what we specialize in, helping people scale with a real estate portfolio, getting into multifamily investing, and we'd love to have a chat with you, a conversation with you about how we might be able to help you. So go to thefreedompodcast.com. That's thefreedompodcast.com, and there's ability for you to book a call there, have a conversation on what that would look like if you were to work with us. So we'd love to have that conversation, help you avoid some of the bigger mistakes, but also scale a lot faster. So hopefully that was inspiring to you to get out there and get some deals done. And we're shouting out people that are doing deals all the time. And so people are always doing deals in every single market. The way to do is you got to be talking to brokers, because that's how you get the deals, is these off-market or semi-off market deals, because a lot of brokers, they would prefer not to have to go through the listing process. And a lot of sellers actually don't want it either. They're like, hey, I don't want a big to-do. I don't want to spook my property manager and my tenants. I want this done quietly. Here's my strike price. If you get me close to that strike price, you get me a solid buyer, I'm not listing this thing. It's very common. So you want to be on that inner circle. You want to be responsive, and you want your broker to know kind of what your buy box is, or what your criteria are, and they will bring you one of these off-market or semi-off market deals that you only see, or maybe a very, very small number of buyers sees, and that's how a lot of the deals get done. That's also how a lot of people get deals done when the market is, quote, hot, and so that's how things get done. So hopefully you're inspired by that and start looking for deals, start talking to brokers now. So with that, here's the Financial Freedom. Catch you next time.